2020 right now, and I'm bullish on GameStop at the current price point of about $4 per share. You know, let's go! Back with a vengeance, shares of GameStop soared more than 70% yesterday. Major breaking news, Roaring Kitty, aka Keith Gill, the man behind the original meme stop craze on GameStop, is officially back. What should we make of all this? Because I find this a little scary that this can happen with one picture like that.
In 2020, Wall Street was shocked by a seismic shift in the investment markets. A movement fueled not only by suits and ties, but by smartphones and solidarity. It was the rise of the empowered retail investor. Who was leading the charge? An influencer by the name of Roaring Kitty. He stirred up a frenzy about a struggling game retailer called GameStop. Social media platforms lit up as people joined forces, sharing strategies and insights. The whole investing game was about to change. Roaring Kitty's leadership was not without scrutiny. After the dust settled, questions arose about his role in the whole affair. He faced intense scrutiny and legal challenges, leading him to go underground for 3 years. But now he's back in the spotlight, and things are heating up once again. As I walk through the sequence of events that changed history, I'll be drawing comparisons to today's environment and answering the question, could lightning strike twice? By the way, if you like this content, then hit the like and subscribe button and leave me a comment down below. At the heart of this revolution stood a seemingly unlikely target, GameStop, a struggling video game retailer facing an uncertain future. Enter Roaring Kitty, or Keith Gill, an online personality and influencer who became the unlikely champion for this movement. His meticulous research wasn't confined to dusty reports and arcane charts. He crafted compelling narratives, dissecting the potential value proposition of GameStop in a way that resonated with a new generation of investors. His passionate advocacy wasn't just about financial gain, it was about challenging the established narrative and empowering the little guy to take a stand. The message resonated. Retail investors, drawn to the potential for profit and the chance to challenge the status quo, piled into GameStop. Social media platforms became battlegrounds, with subreddits like Wall Street Bets acting as virtual war rooms where strategies were shared, research was disseminated, and a sense of camaraderie blossomed. The mainstream media, initially caught off guard, scrambled to understand this new phenomenon, dubbed the Reddit rally or the meme stock frenzy. It was a story that transcended the pages of the financial press. The outcome was nothing short of historic. A classic short squeeze unfolded, sending shockwaves through the financial system. The hedge funds, desperate to cover their short positions, were forced to buy back massive quantities of shares at an ever-increasing price, further fueling the price surge in a self-fulfilling prophecy. It was a real-life David versus Goliath story, and for a brief and glorious moment, it felt like the retail investor had triumphed. The established order had been challenged, and a new era of democratized finance seemed to be on the horizon. The GameStop share price, which started around $4 when Roaring Kitty started posting his analysis, briefly went above $500 a share in pre-market trading on the 28th of January 2021, before hitting the $483 price during the trading hours. Following his role in the saga, Roaring Kitty was called upon to testify in front of the US Congress. He faced scrutiny in his part in the actions and was forced to defend himself against claims of market manipulation. While he was ultimately never charged of any wrongdoing, the Reddit channel Wall Street Bets was temporarily disbanded, and Roaring Kitty stopped posting on social media. It was thought that he'd cashed in his profits and retired from the game, with an estimated $37 million. It's been 3 years since Roaring Kitty posted on any of his social media channels, until now. In a series of cryptic posts on social media platform X, he's caused a new stir, first posting a picture of a gamer sat upright in his chair, which has been seen over 27 million times and counting. This has been followed up by a series of clips and scenes from movies and TV shows, with over 80 posts in the last week. Fueled by speculation, the price of GameStop, which had fallen back down to about $10 a share just weeks ago, surged up to $64 a share after these posts, before falling back down now to a current position of around $20 a share. Before I make my predictions, a quick message about our video sponsor. Navigating such volatile markets requires a measured approach. one that goes beyond chasing fleeting trends fueled by online hype. It cannot be stated enough how important it is to trade without emotion. I don't want to be constantly glued to a screen, anxiously watching every price fluctuation. That's why I use algorithmic trading through Arrow Algo. It's a revolutionary no-code algorithmic trading software that empowers anybody to build, backtest, and run automated trading strategies without needing to know how to write code. Arrow Algo uses a block builder engine, so you simply drag and drop the blocks to design your trading strategy. You can backtest your strategy to see how it would have performed in different market conditions, giving you confidence before risking real capital. And the best part is it's free. There's a ton of resources and support available to help you learn about trading and markets. Remember that the financial markets involve risk, so always do your own research before investing. Never invest more than you can afford to lose, and always thoroughly understand and backtest any strategy before you run it live. Now back to our video. I think there are 4 key factors to consider when we question whether a repeat of history is possible. The first is the regulatory spotlight on Roaring Kitty. He's already had to testify in front of the US Congress once. The intense scrutiny he faced might make him more cautious about any actions that could be construed as market manipulation. His social media posts, while undoubtedly sparking an interest in GameStop, remain cryptic and open to interpretation, without the same level of explicit advocacy and detailed research. Remember that this is a smart guy. He was working as an investment analyst before the saga, which is why his analysis was so detailed the first time around. I have no doubt that he has a good understanding of the regulatory rules around sharing thoughts without giving advice, and that any move he makes will have been well thought out and planned to avoid getting into trouble. But will he be able to rally the troops as well as last time if he can't make such direct statements? The second is the scars that have been left behind for the hedge funds the first time around. The hedgers were caught flat-footed in 2020 and 2021, and they lost billions. How likely are they to make the same mistake twice? Surely if they're being smart, they would have already adjusted their short positions, and they'll be implementing strict risk management policies. They'll likely have more vigilant monitoring in social media sentiment, and they'll have adjusted their algorithms to identify potential retail investor movements. This increased preparedness could make them less susceptible to a repeat squeeze. Thirdly is the shifting economic landscape. The current economic climate paints a vastly different picture from 2020 and 2021. Rising inflation and potential interest rate hikes are causing anxiety among investors. The cost of living crisis looms large, forcing many to prioritize essential expenses over riskier investments in volatile meme stocks. This shift in risk tolerance might dampen the enthusiasm for a repeat of 2020-2021, which we all remember took place during lockdowns when the masses were collectively spending a lot more time on social media. Lastly is the elusive factor, crowd mentality versus strategic planning. While the potential for a renewed crowd mentality push on GameStop's price cannot be ignored, it's important to understand that the last movement wasn't solely driven by unbridled enthusiasm. It was fueled by a potent combination of factors: extensive research conducted by retail investors, passionate advocacy from figures like Roaring Kitty, and a strong sense of community that fostered collaboration and shared strategies. Without all these elements in place, replicating the last phenomenon might be very difficult. So what's my prediction? Based on these factors, I think it's unlikely that we'll see a carbon copy of the 2021 GameStop saga. While there might be a renewed surge in price driven by retail investor interest, the factors we've talked about suggest it will likely be less dramatic. The question remains though, if not a full-blown repeat, what could a potential scenario look like? Is there room for a more measured approach that combines the power of the retail participation with the benefits of strategic planning? Remember that while a lot of people benefited from the explosive gains, many investors got hurt. They held on for too long and they didn't take their profits. They thought they were going to become millionaires, and many of them ended up worse off than where they started. Roaring Kitty's photo has been viewed over 27 million times. Each of his 80 or so video clips have been viewed over 1 million times each. So is he about to coordinate another rally, or is it possible that he's just looking to cash in on some social media ad revenue? Only time will tell. Happy trading.